good afternoon. Welcome to Life Unrehearsed. My name is Matt Delvecchio, specializing in life transitions, elder care planning, and the senior living industry. I wanted to start you off with a great song sung by Elvis and his daughter, Lisa Marie, who, as many of you heard, died this week at the age of 54. So a little tribute to Elvis and his daughter. Coming up on the first half of Life Unrehearsed, which insurance choices should we be making and avoiding as we age? Priorities change throughout life. Insurance options for a young family with children could be much different than a retired couple or someone who is widowed. We'll hear what to do and what not to do regarding insurance during our life transitions. And looking forward to the second half of the show, January 14th is National Skate Day for Alzheimer's, and there are some brave souls from across the country that are skating for a good cause. We'll have live interviews from Kingston and right here in Montreal. You won't believe how long some people are skating for, all to raise funds and bring awareness for Alzheimer's. All right. You know, insurance is typically a touchy subject. It's one of those things where you can always second guess yourself. Is it really necessary? And are we choosing the right options? And do we have to adjust the type of insurance as we age? Well, let's bring in Marco Vendramini. He's a financial advisor with IG Private Wealth Management who provides guidance and advice to his clients on a daily basis about these tough insurance decisions. Marco, welcome to Life Unrehearsed.
Hi, Matt. How are you?
Doing well, Marco. Thanks for joining me here on a Saturday. And let's first talk about life insurance. Can you just explain the difference between permanent life and term life insurance?
Sure. In a nutshell, term life insurance is pretty simple because we all have it. Car insurance, for example, when it's renewed every year, is term insurance. So if you have insurance which you pay and it has a lifespan or a term of 5 years or 10 years or 20 years, your premium, you're basically just paying insurance. You're not accumulating savings or whatnot. And usually that's the type of insurance that a lot of business owners and young families will take because you don't want to pay like a ton of insurance to have good protection. So term insurance is not a great long-term solution, but it is a pretty good short to medium-term solution. Permanent insurance is a long-term solution. Permanent insurance will, first of all, the cost that you will be paying today will be the same cost that you will be paying in 5, 10, 15, 20 years, and so on. And if there is an intent of having insurance over the long term, and there can be a lot of reasons why you may have that intent, then permanent insurance is the way to go.
All right. So, the term insurance, kind of short term, it will change over time, whereas permanent life insurance, that is your long-term insurance, a way of also building some savings. We're going to talk a little bit more about those, but I want to just get into some real-life examples, Marco, and let's start with a younger family, okay? Someone in their 20s, 30s, 40s maybe, and should they seriously consider permanent life insurance at this young age?
So the quick answer is yes. Especially, often we don't even consider taking life insurance when we're 20 because we feel invincible and we say, well, why should I have insurance? I don't have a spouse yet, or I don't have kids or whatnot. But what we do have when we're 20 or even 30 is insurability. If we have a good health and we're 20, nothing guarantees us that, when we'll have to take insurance, because we have a family or we have a business, nothing guarantees us that our insurability will be there, meaning will our health be okay when the time will come to take insurance. So when I'll be 30 or when I'll be 35, and this is a real issue. So we even recommend to parents to even consider taking life insurance on their newborns. And a lot of times grandparents don't know what to do. I mean, should I buy this toy or that toy or whatever? And a great way to help out younger families is to buy either life insurance or critical insurance to their grandkids, and it really makes a long-lasting, great gift. And the reason why you would want to do that, it's not because you think your newborn is going to pass away in the next 2-3 years. It's because, again, that newborn has insurability. So you want to guarantee that insurability because nothing guarantees us that we're going to be healthy tomorrow or in 6 months or a year.
Right.
So it's very important to have that.
Yeah, and I love the idea of the grandparents. Hey, how about a gift of that? And it's a way to save money also for
Sure.
the kids. You're listening to Life on Rehearse. I'm Matt Del Vecchio, and we're talking with financial advisor and insurance specialist Marco Vendramini. Now, Marco, continuing along with Permanent Life, this is a potential savings vehicle for them, but do payment, let's say you're starting in your 20s and 30s, and there could be some hefty payments. Does it ever stop, or does it have to be paid until the end of life?
So it depends what option you take, Matt. So there are permanent life insurances that you can pay over 10 years, over 15 years, or over 20 years. And there are some that actually you can choose to pay for the rest of your life. And the question is, we often see as, oh, my God, I'm going to have to pay this for the rest of my life. This is horrible, but there can be an upside. In permanent insurance, there is a savings component, and that savings component is invested. The return that you make on that savings component is also tax sheltered. So for people who have maxed out their tax-free savings accounts and they're looking at a way to tax sheltering money, it becomes very interesting. The other thing, too, is that when you accumulate savings in a permanent life insurance, what that is going to do is if you insured yourself for, let's say, a face value of $100,000, with the cash value that you have in the permanent insurance, there are two things that are going to happen. First of all, you're going to build savings in that policy. But the second thing is that life insurance, which was $100,000, with time will go to $150,000, $200,000, $250,000. And that's significant because if you're in your 50s or 60s or whatever, and this thing is now, at a value that's very significant, you may not be insurable at that age. Mm-hmm. So again, there are different options. How long do you want to pay this permanent life insurance? But it's not a negative that you may be able to pay it forever, I think what you want.
All the more reason to sit down with, an insurance person or financial advisor to have those questions. Do I want to pay out for 10, 20 years? I love the fact, for permanent, that's the big difference with term. Your term, yes, it's lower, but you're throwing money out every year. And whereas permanent, it's in a way forcing you also to save some money. And there's some benefit there. You're getting that cash value, like you're saying, and the insurance coverage actually increases over time. Now, we're going, Marco, I want to switch it up a little bit. That takes care of the young families. Now we're going to hit the boomers, and we want to talk life insurance for people in their 50s, 60s, even 70s. Does it still make sense to take out life insurance?
It's a great question because a lot of people get to that point and they have money. They say, well, I don't need this insurance anymore. The kids are gone. My mortgage is paid off and everything. Why would I need insurance? And, we've talked with our clients and estate insurance, paying taxes on the second one that passes on is interesting, but people aren't, they say, really, my kids are going to get enough money and so on. But here's the kicker. The kicker is when, a man and his wife are retired, the magic of income taxes is that you can income split. So if people are basically earning, family income $100,000 and they can split that income 50-50, it's fantastic because you're maximizing tax savings. The issue is if one of the two passes on. Well, if one of the two passes on, that income splitting is gone. The other thing that's gone is old age security. I mean, if one of the two was getting old age security, that $7,000 to $8,000 annuity that you were getting, that's gone. The QPP, if you were getting a sizable QPP, yes, there will be some type of widow pension that will go to the other spouse, but again, it's going to be significantly reduced. And then the other thing is if you had a pension from an employer somewhere and your spouse upon your death was getting maybe 60 or 50% or whatever, again, that's a reduction of income.
Right.
So here's the thing, right? We reduce our income. So income will be reduced when a spouse is passes on, and income splitting disappears. So we want people to be insured individually so that insurance will replace that annuity, which will basically disappear.
Which is exactly what the insurance is there for in those situations. Talking with Marco Vendramini from IG Private Wealth Management about our insurance options, especially as we age. Marco, we have to head out to traffic, but when we come back, I want to talk about critical illness insurance. And you've got a story with, actually, a real story with one of your clients that is very, very interesting that I'd like our listeners to hear. My name is Matt Del Vecchio, and I'm talking about the tough decisions we all need to make as we age when it comes to getting proper insurance. My guest is financial advisor and insurance specialist Marco Vendramini from IG Private Wealth Management. Just before traffic, we were talking a lot about life insurance, the importance for all different age brackets and the difference between permanent and term. And now, Marco, I want to switch gears a little bit to talk about the importance of critical illness insurance. And you have a pretty interesting story about one of your clients that really benefit from critical illness insurance. So let's start with, what is that?
Yeah, critical illness insurance, we basically started recommending this product back in 2005. And what it is you basically insure yourself for $50,000, $100,000, $250,000, $1 million, or whatever. And if you do have cancer or a heart attack, 30 days later you make a claim, and basically the insurance company gives you a lump sum of that specific amount that you insured yourself for. Now, one of the options that you can also take is what we call return of premium, which in some countries does not exist anymore. And I'm saying that because it could happen that in Canada one day life insurance are going to say, you know what, we're not offering that anymore because we think it's too much of a benefit. But having said that, all of the products that I've recommended to my clients do have return of premium benefit, which basically means, Matt, that if I have $100,000 of critical life insurance and it's costing me, let's say, $2,000 a year, well, after a certain amount of time, say 15 or 20 years, I could choose to cancel the insurance and have that return of premium come back to me. So, I didn't get the benefit because I didn't get cancer or heart attack, but at least I got my premiums back, which is better than a lot of insurances that we pay that we never get anything back.
Yeah, very interesting. I mean, that's, they're, again, kind of forced savings like we were talking about beforehand. And you're buying the insurance just in case something critically happens. And if nothing happens, God bless you, and you might get your premiums back. Now, I think you have an example that you could share with us.
Yeah. So this client had a mortgage, and he was in business and everything. And I said, you know what, you should, protect your mortgage. You should take $400,000 of critical life insurance. And it was costing him, I think, $5,000 or $6,000 a year. And, it was significant, but at the same time, I said, listen, if you never get anything, you'll get all your premiums back. Well, 10 years down the line, and the thing with critical life insurance is that it doesn't only cover you for cancer or, heart attacks or whatnot, but a lot of other critical illnesses that you can have, like Parkinson and so on and so forth. And also, in his case, what happened is that he had a benign tumor that had to be removed. So upon successful operation of that, of course, he was able to make that claim. Now, for years, he was always telling me, why am I paying this? Why am I paying this? And I told him, I said, I don't want you to cancel this because it's giving you great protection and it's a no-brainer. You'll get your money back. Well, lo and behold, earlier this year, he lost his job. The markets last year, as you know, Matt, decreased. So if this person did not have this critical life insurance, he would have called me up and he would have said, listen, I have to take out my investments and so on. Not the best appropriate time to do that. But at the end of the day, he was able to make that claim, and we gave him, the insurance company paid him the benefit of $400,000.
And that's a one-shot payment.
One-shot payment. Yeah.
And is it taxable?
No, it's not taxable at all.
Wow.
He was able to take some of that, pay down his mortgage, and he even had some money left over that he invested, and it was a great time to invest last year because the markets were down. So rather than not having anything and taking out his money from investments has gone down, look, at the end of the day, nobody wants an operation, right? It's not interesting to be in that situation, but he's doing super well today. And it's just a great story. A client of mine for 25 years.
And the reason why to take it out. And like you said, those yearly payments, they add up. But having that security that you're going to get your premiums back, and God forbid something happens, and this is what happened, one lump sum payment for the entire insurance policy, fantastic. Exactly the reason to consider critical life insurance. You're listening to Life Unrehearsed. My name is Matt Delvecchio, and we are talking with financial advisor and insurance specialist Marco Vendramini about many different insurance choices we have as we age. Now, Marco, we've talked about critical life, but what is disability insurance? Is it the same thing or is it something different?
It's a great question because people get that confused. If I were to tell you disability, if you had a car, disability insurance are the brakes on your car, and critical life insurance is, I'm sorry, I'm trying to find the term in English, but le coussin gonflable. What do you call that, Matt?
Yeah. Oh my God, I'm even in the English term. It's your, and I could hear listeners screaming into it's our inflatable when you crash the car. It's
right.
It's our inflatable.
It's that inflatable thing that comes out of the steering wheel.
That's right.
Anyways,
someone text me 514-800. What's the term? In English. I'm even struggling with it.
There you go. Anyways, long story short, which of the two would you prefer having, the brakes or that option? And I think at the end of the day, it's both, right? We just don't want one or the other. So disability insurance is not a lump sum coverage. So if you're making $100,000 a year, and let's say you have a disability that would basically prevent you from going to work for quite a long time. And, it could be, for example, a burnout. It could be cancer. It could be a bunch of different things. Basically, you're covering that income. And let's say you had Parkinson's and you had that for a very, very long time. Well, at least, you'll be getting an income and if you took the option of age 65, you could get an income till age 65. Now, you can have disability, Matt, and also have critical life insurance. So it's not one or the other.
Right. You could
actually have both.
Right. Well, Marco, I got to tell you, I love our listeners. You won't believe the texts coming in. It's airbags. Okay. How could we forget airbags?
Yes. Thank you. Thank you. Airbags.
Thank you, everyone. They're still coming in. All right. Yeah. So, I love that analogy. Okay. We're going to shift gears a little bit here. And I want to talk about something, as you know, Marco, I am very much involved in assisting families, loved ones, seniors in their life transitions.
Yeah.
And I often get asked about long-term care insurance, which was popular but seems to be getting less popular, mainly because it's not as available. So can you explain what is long-term care insurance and what's going on with that particular insurance?
Well, the insurance companies are basically in Canada getting out of the market because it's a product that's very, very hard to price, and there's been a lot of claims. Like people who have had this long-term care insurance, and again, it's a bit like a disability insurance, Matt, but you're retired, if I can say that, and you can have long-term care with disability as well. But most people will claim long-term care insurance once they're 65 and over, and so on. And, a lot of objection in the past was, well, it's too expensive and, who knows if I'm going to have this or have that or whatever. But what's happened is that all the policies that were issued in the last years, there have been quite a lot of claims. And, I don't have to explain that to you. You're in that business yourself and you see what's going on in CHSLDs and so on. There's a lot of, unfortunately, sick people, and most people, unfortunately, don't necessarily die in 2 seconds. I mean, they end up in CHSLD. So long-term care insurance is pretty much not an option for my clients anymore because the product basically doesn't exist, and those that do exist are not crazy good product.
Yeah, no, very interesting how that is changing. So difficulty getting some long-term care insurance. There are like a couple out there, so talk to your broker about that. I know Sun Life has one of them. Okay, we are running out of time very, very quickly, Marco. Is there a possibility, texter just came in, is there a possibility of getting life insurance that provides coverage regardless of your medical history in 30 seconds or less?
The answer is yes, but before going towards that, I would definitely want to see if I can be insured differently, because that could be totally less costly than going with that. I'm going to pay this and I don't have to check anything.
Right. Okay. Super. We're already out of time, Marco. I want to thank you for coming in. Tons of information. I really appreciate it. How can our listeners get a hold of you?
MarcoVendramini.com. So MarcoVendramini.com. Or they can text me and leave a message on my cell at 514-951-4360.
All right, Marco. Thank you very much.
Thank you very much, Matt.
All right.
And great show for the second half.
All right, appreciate that. That's financial advisor and insurance specialist Marco Vendramini from IG Private Wealth Management. Next up on Life Unrehearsed, January 14th is National Skate Day for Alzheimer's. There's some brave souls from across the country that are skating for a good cause as we speak. And I'm just not talking about a leisurely skate here. We're talking some marathon skates. You won't believe how many hours some individuals are skating today, all to support